Monica DiCenso is Global Investment Specialist at JPMorgan Private Bank. And Amy Wu Silverman is the Head of Derivative Strategy at RBC Capital Markets. Welcome to both of you. Amy, let me ask you, why do you think we're seeing these numbers out there that the Fed's going to cut rates later on? Is Steve right? Is this some hedging activity that's taking place?
Well, I think part of the problem is that people, there's still the hope in the market. And when you look at the options market, it makes it so that the tails, if this doesn't happen, are quite cheap. And that's something we've looked at for a long time.
There's hope in the market that there will be a cut.
Yeah, and if that does not come true, the tail in the options market to own that hedge is quite cheap, because I think that people are sort of underpricing the fact that this might not happen, or frankly, that the coronavirus or some other tail in the market is going to be so much worse than can be priced in that we haven't really had the ability to value that on a derivatives basis.
So it's cheap because there's so many unknowns and it's still a long way to come.
Yeah.
All right. Monica, let's talk just a little bit about why we continue to trade at new highs. S&P, the Nasdaq, the Dow just off of it. Why is that happening in the face of all these questions?
I think you go back 12, 18 months, there were a lot of fears in the market, right? China trade war, earnings growth, what will the Fed do? Will they be nimble? And everything we're hearing is, yes, they will be, and they will come back to market if needed later in the year if we see growth stumble. And as long as that backstop is there, you can be a little more enthusiastic about equities. That should allow valuations to hang in here, maybe even expand a little more.
Amy, what do you see just in terms of investor optimism or the idea that people want to offset some of that risk with hedging?
The way I would characterize it is that everyone is very under-hedged, but it doesn't mean that they're not bearish. It's simply just been a problem of we've been in this bull market for how long now, and people can't carry that premium. They just watch that option value burn away. And so the people who are trying to hedge, they're all doing it through some sort of mitigation way. So it's either, selling to offset this or pairing in different calendar months. But it's not that they're not bearish. It's simply that they don't know when the music's going to stop.
You think it's all Fed? It's all easy money. You don't see anything else good happening in the country, wage-wise?
Earnings growth was better than people thought.
So there's some good things in the economy, not just the Fed.
No, she said that too. She said if we see growth start to stumble, then it's a different story.
Right.
But the Fed will step in.
Right.
But just in terms of where we are policy-wise, you're positive on deregulation, on any of the lower taxes?
End of the day, you just don't have a recession with a strong consumer. And the consumer in the U.S. remains strong. So it's hard to be that bearish on the fundamentals unless you see that turn.
Okay.
What do you like in particular, Monica?
The challenge is, how do you find value in this market when multiples are near higher end of the range? We do look to what's happening in China. While the market has largely shrugged it off, there are sectors that have massively underperformed, like energy, like consumer names that are tied to China. I'd be a little bit cautious about going into the airlines now as far as who's linked to China, but certainly casinos, different consumer companies, they will rebound over time, and they're still down meaningfully from highs.
So that's the outlook, Becky, for economists. When we talked Monday about the current outlook for growth, goes down to 1.2% this quarter, but those are one-time factors built in, Boeing and the coronavirus. Goes back up to 2, and the average person I'm talking to is just sort of 2 steady. I think if you get that 2 steady this year, you don't get that rate cut, but I think that's going to be okay with the market. If you tell me that we're closer to 1 without a rate cut, that's another story. Get back up to 2. Cruise at 2, and if you have this earnings rebound, I'm hearing better things about earnings, sort of double digits. Is that right?
Our view is high single digits.
High singles, okay.
If growth comes in better than expected, you could see double digits. Just the China story is a big question mark, and how that impacts Q1 and Q2.
If the best case scenario plays out for the coronavirus, that things start to taper off in China, that it doesn't pick up in other countries, that the warm season comes, and maybe that kills off this coronavirus for now, what do you think happens to the overall market?
I mean, this is normally when you look to trade or buy this dip, is when you see the rate of infections decreasing, which is what's happening. So if these numbers are real, you should be looking now to get invested over the next.
I think stocks
so
are.
When you say buy the dip, you mean the dip in coronavirus cases,
in the China-linked name, exactly.
In the China-linked name that comes with that. Amy, what else would you tell investors to do right now?
I think, if these things kind of go by the wayside, then selling calls in your portfolio to extend that yield in a world where yield is very hard to come by is a simple way to look when you have very full valuations.